Hey, good afternoon. Welcome everybody, guys. It is Monday, the 7th of August. My name is Dane van der Mas. This is the DVM Markets Daily Dose. Guys, we have a ton to get through. So the new show format is that Premium Plus clients will get to join us live. This is being streamed live as we speak. The rest of the world will see this after the fact. This gives you guys an opportunity to get fresh content and have an opportunity to ask questions in real time. So we have a ton to discuss, a ton to get through, and very little time to do it. So let's just jump straight in. I'll do the shout out as I see the comments come through. So let's jump in. Let's have a look at what we need to be dealing with for this week. So as I put out into the groups, this week is inflation week, right? The data that's coming out from the fundamental point of view is all inflationary based. Now, it's hugely important. It's going to dictate the state of the US economy. It's going to dictate the state of the world economy moving forward. We're in a very unique place in time where we're starting to see the inflationary cycle, the disinflationary cycle start from the pandemic era, right? And this week we should start to see the first concrete evidence for both the FOMC, the reserve banks from around the world. Is there a solid print that inflation is actually coming down? We're going to see that. That's coming out this week, Thursday. However, looking at today, anybody trading the Canadian dollar, just please be advised, it is basically a civic holiday, which is also a bank holiday. So the Canadian dollar will be moving fairly slow. There is one item that is coming out this afternoon that I am not 100% sure of. That's going to be with regards to this FOMC members that are speaking today, right? It can have an effect. So we obviously just want to pay a little bit more attention, be a little bit more careful this afternoon. There could be something popping out of these speeches that if we're not following live, it's obviously fairly hard to predict. So anytime there's fundamentals, maybe outside of your control, and if it affects a trade that you're in, you just want to be a little bit more cautious. So you'll see we'll take trades, we'll take profits a little bit sooner, we'll get out of trades sometimes prematurely, just to obviously play it safe. Now, looking at the balance of the week, because obviously that's what we're here for, we're going to see some big data starting to come through, right? We have some German inflation data coming out tomorrow. That's the 8th of August. We have China and Mexico also giving out the inflation data. That is going to be on Wednesday. Then Thursday is the big day, right? This is CPI. This is going to give us all the data we need to fully understand, is the US actually in a disinflationary cycle? Now, why this is so important, I'm going to flick over to the dollar index to fully give you a comprehensive understanding of why this is so important. So we're going to switch over. I'm going to speak about gold in a second because this is a pretty amazing and exciting opportunity. We'll get into this. However, it's the start of the US market. We're going to see a bunch of movements. We will take care of that in a second in terms of gold. Just in terms of the dollar index, right? This is dollar index currently on a 1-day time frame. And I want you to see how the dollar has benefited through this pandemic, post-pandemic cycle, if you will, right? So every time there's been interest rate hikes due to inflation, to curb inflation, we've seen the dollar dominating across the board because of a couple reasons. Most importantly being, it is the world reserve currency. So as soon as we ended off 2022 and the Fed started speaking about, right, we're going to start to slow down interest rates, we're going to take our foot off the gas of, this intense interest rate cycle increases they'd be going through, the dollar started to sort of lose a bit of momentum. Now, where we are at the moment, which is most important, is we broke through a decent area of support, and that pretty much happened in the middle of last month. The dollar has been on the steam train, gaining a bunch of momentum, and last week we were really focusing and looking at, would the dollar break this diagonal structure or gain momentum towards the top side? We did temporarily last week, and that's why we saw Wednesday, Thursday, a little bit of a wobble in the markets just from a price action perspective, and that was because of this imbalance that we're seeing right here on the dollar index. However, zooming a little bit closer in, I'm going to drop to an hour time frame, and I just want you to see that we've peaked at that level, and where we are at the moment, where we were looking at today for opportunities, and what I think is going to be the biggest opportunity for the start of this week is that the dollar index has attempted to push to that 61.8 and might potentially even be failing that level. Dropping down to a 15-minute time frame, we can see we're starting to fail the 61.8 and potentially moving down to the 50. Now, at the start of this US session, should we start to see a dollar sell-off, this could be a sign that we're into that next state of the dollar sell-off. Now, why would the dollar sell off, right? For a couple reasons. The first reason being that we could this week, Thursday, see the first proper evidence of inflation starting to slow down in the US. We know that if it slows down in the US, the ripple effect will be global. If that inflation does print lower than expected, it will have a negative effect on the dollar. And I think at the moment, the markets are looking at this being a high likelihood over and above potentially being an underprint there's certainly a lot of evidence to say that inflation has slowed down, right? And this will have a negative effect or consequence on the dollar. And I believe that markets are going to start to absorb this data and start to make some early assumptions based on what's going to happen on Thursday. And I believe that's where we're going to have opportunities to get into some early trades. Now, what would those trades be? These would be trades that have been heavily under pressure from a strong dollar. The dollar turns around. Most of these trades, if we look at indices, if we look at commodities, are in oversold territory. They're well underpriced for what they are. So should we see a dollar sell-off, that would give us amazing long opportunities on things like gold, things like indices. So that's why last week, when we were looking at those long opportunities and we were having a bit of a tough time on Wednesday, Thursday in the markets, that is because the dollar hit that ceiling, that resistance that we were hoping it would not break, but then it did. And it sent the whole market into a little bit of price action turmoil, if you will. So with that in mind and that being considered, I want to point your attention to gold because we found something extremely interesting that I want to talk about, right? Now, if we have a look at gold on a daily time frame, right? So I'm zooming out, this is a daily time frame. You'll see that over the course of this year, being 2023, gold has been in a sharp increase, right? It's been in bull territory, mostly due to the fact of the weakening dollar, but over and above that, mostly due to the fact that the dollar has gained so much strength over the course of these interest rate increases. And now that we see a potential turning or tipping point, this is now giving back commodities a little bit of a rally. Again, should the dollar continue to decline, this will only further signal topside movement for commodities across the board. But gold is the one we're going to pay attention to. Now, what I want to draw your attention to today is on a 4-hour time frame. I just want to show you guys something really interesting that we found this morning. And if we go, and we've been discussing this in the leadership groups and different groups that we obviously have, but if you go and have a look at the spike down, again, the spike down to this massive diagonal support, the spike down that we saw on the 29th of June, you'll notice that if we just get a little bit closer, and I'll maybe go down to a 1-hour time frame. If we go down to that spike on the 29th of June, you'll see we spiked down and made a retracement down to the 61.8. So we spiked down, built back up value, and then came down to 61.8 before continuing a massive bull run, right? We go a little bit further onto the 7th of June. We saw a very, very similar thing. The spike down on the 6th of July. Sorry, I think I might have said June. The 6th of July. And then we see markets rebuild and then make a sharp pullback to the 61.8, ultimately resulting in, again, multiple days of gains on gold. If we go to where we are now, and this is what we spotted this morning, is that again, looking at that same diagonal support that we see down here, we received that spike last week, right? When it came down to the NFP, obviously had a markets pretty much broke down pre-NFP. NFP came out, weaker dollar, we bought gold, right? So if you're part of NFP with us, we absolutely smashed it. We haven't made a lot of noise on social media about that because it is what it is, right? But if we spike down to that diagonal support, we've now rebuilt or retraced to the 61.8. And if you look at where we are right now, we've come down to the 61.8, and that is why I issued out those buy orders. If you're part of Premium Plus, why we issued out those buy orders a little bit earlier, right? So we're sitting at 19.34 at the time. And if you're currently in that trade, you should be around about 20 pips of profit as we speak. However, we need to survive the US session. So again, that's why I was hoping we'd be able to hold this one out into the US session and potentially even further into the New York Stock Exchange open, right? That is going to be obviously the main goal for this particular trade, for this particular setup. However, if we continue to see that dollar weakness, it again also gives us opportunities on things like US 100, right? So if you have a look at US 100, we took a buy out this morning. So buy this morning was a potential spike that we got at 10 o'clock, almost on the dot. We bought it out. We made a decent amount of profit. I think we went for about 200 or 300 pips, but on the retracement, obviously said, move stop losses to entry, and that was a safe call. In the leadership group, we took some reversals here. We took some sells, and I know a couple of the leadership group team members, went for 300-400 plus pips. However, what we're looking for this afternoon, again, is that break in structure and that fact that we are above this diagonal, mostly price action, to see whether gold can hold, or whether the US 100 NASDAQ can hold up against the price of gold. Now, for this trade, we might need to wait for it to materialize to the New York Stock Exchange session. And should we get there and we start to see that momentum, that's where we're going to start to look for longs. Inversely, should we fail the structure, we have quite a big support just currently south of our position. and that is currently on NASDAQ reading at about $15,336. So 15336. Should we fail support in the New York Stock Exchange, again, that would mean the dollar has essentially dominated the markets for today, and we'll have to look for breakouts at a later stage. But that's the current main two things we're focusing on. Again, whatever happens on US 100 in most cases is also simulated on the Dow Jones. So very, very similar. We've got a price action break that happened about 15 minutes ago, and we're seeing that the US 30 is trending in a reasonable space, right? But again, we want to wait for the New York Stock Exchange in order for this to open up. Now, again, this is fairly early in the week in the sense that it's a Monday. We all know how Mondays can sometimes be. Last week, Monday, we absolutely smashed out the park. However, we always want to be a little bit more cautious on a Monday. So where we would be taking normal swing trades in situations like this, we're taking more scalps that can develop into a swing. Now, I did mention in Premium Plus that the gold position could develop into a swing trade, and that is why I wanted to just further explain why we're looking at this bottom out on the 61.8. Another clue that the markets gave us for a potential reversal is going to be this divergence, having a look at, I think it was on 15 minutes or 1 minute, I'm not 100% sure. I think it was 1 minute time frame. Was having a look at just, you know, how much of the markets are telling us from an RSI perspective that we're losing sellers in the space, whilst markets are making those lower lows, we are getting those higher lows on the RSI, showing us a little bit of a thinning out of potential sellers in the sector. So these things all lining up from a technical perspective, lining up for a potential gold buy or breakout. However, if you're watching this later on, you're part of the free groups and you're seeing this not in live time or live format, and you're just looking for, you know, a little bit of an edge on the market, gold is primarily, you know, the major resistance here is sitting at that 1937 mark. So a break above 1937 will signal a clear break. It would clear the immediate resistances above us, and we could potentially see for the balance of the afternoon substantial moves on gold, anywhere from 50 to 70 pips top side. Now again, you know, we trade indices, we talk about 200 pips, 1,000 pips, whereas a single lot on gold is $10 per pip. So if you're running, you know, a 20 lot trade, or you're closing 20 pips in profit on a single lot, that's $200, right? So the pip count's smaller, but the gearing is a lot larger on gold. So again, with that comes risk and reward. Please, as always, you need to be managing things accordingly. So those are going to be the big items, the big ticket items for today. Obviously, the balance of the day and really the focus of the week is really building up towards this inflationary data. As we get close to the time, we receive more information from analysts, more, you know, opinions, if you will, and we try not to focus too much on that, but we're certainly trying to focus on how to get in a position prior to the data coming out. So in the perfect world, we'd want to be in a position that supports our forecast and our analysis by Wednesday, so that we can withhold or at least stand through some of that noise in the market that comes with some of these big events, right? So again, you know, we want to try get in positions that are going to be a high likelihood of materializing for Thursday by Wednesday. So again, if you want to be a part of that and you're watching this after the fact, you want to certainly get into Premium Plus in order to benefit. But I thought this afternoon it's going to be extremely important to explain why we're looking at some of these positions and why we're trying to hold some of these long-term positions, so that if you see a little bit of a wobble in the markets, you understand where we're going long-term. Again, the purpose of DVM Markets is not market opportunities. It's not live shows. It's mostly about empowering people to understand what is happening and why things are happening, so that you can develop your own skills as a trader to take your trading journey to the next level. So for this afternoon, that's going to be the main focus. New York US Open has just happened a few minutes ago. And again, the purpose now is to see how this moves into US Open. Do we start to see that dollar weakness? And then secondly to that, it's going to be at 3:30 GMT plus 2 when the New York Stock Exchange opens, what sort of volume do we see pouring into the markets? Now, again, I feel personally, and this is just my opinion, this is obviously nothing we do here is for financial advice, but the fact that we received on Friday, this is looking at gold as an example, the fact that we received on Friday that weaker dollar data, and you know, gold performed extremely well, but then sold off. If we look at where we are now at this point in time, tells me that that weaker dollar data hasn't fully translated into a shift of market structure on gold, NASDAQ, or Dow Jones for that matter. Now, if you pair that with the potential outcome that inflation has reduced or will reduce by Thursday, this is then a perfect setup for that long-term setup. However, As many of you guys know who've been trading for a while, these long-term setups often are accompanied with liquidity grabs from big banks, etc. So when a move seems extremely obvious or there's a high likelihood, you have to proceed with caution. In most cases, it's about protecting your accounts to withstand any sort of temporary liquidity grab in either way or the other. So that's just something we obviously need to take into account. However, I'm extremely excited for Thursday. I think we're going to see some big moves. And again, Thursday will signal the first cement evidence that inflation is coming to some sort of an end, right? If we look at previous months or previous CPI data releases, it's been met with a bit of a mixed bag, right? There's some points that lead to the fact that the US might be on a soft landing, because remember, in prior months, every big banking institution has been shouting recession. And now there's actual proof and potential evidence we could be in for a soft landing, or at least the US could be, right? The rest of the world has to wait on a ripple effect. However, this Thursday will be the first, inverted commas, concrete evidence that inflation has started to come to some sort of end in some way, shape, or form. And that ripple effect in the markets could be massive. Remember, we've got about 2 years of markets dealing with these interest rate increases, dealing with the ebbs and flows of analysts and opinions. But again, should we receive a concrete print that inflation has and started to significantly reduce, this could cause a massive chain reactions of buys in the market against that weakening dollar, which needs to weaken. It's been propped up all these inflationary rate hikes. So it's quite a lot to take in, but if you can just sort of gather the bigger picture and obviously understand that we're at a pivotal moment in the markets where a lot of moves are going to happen, you want to be on the right side of that move. Again, as always, I'm going to be doing it all right here live on Premium Plus. Again, if you're not live with us on Premium Plus, you're watching this after the fact, Premium Plus is less than $1 a day, gets you everything you need to know and so much more in the markets. To all our Premium Plus clients, obviously we're proceeding with a bit of caution based on where we are in the markets today. So as always, trade safe, be safe. Risk management is absolutely key. And let's see what we can do with what we've got. Other than that, guys, we want to end the week super strong this week. So trade safe, be safe as always. And I'll see you guys on the other side of your trades and your withdrawals. Until then, see you a little bit later.